well, might as well get going past 12 here. I know you got a tight schedule. So again, Pierre, thank you for joining us. Thanks everyone for joining the event today. My name is Kevin Johnson. I am an account manager for BDC here in Ottawa. I am representing the Young Canadians in Finance Ottawa chapter for our second event. We started last year. Our first event was for Mairead Lavery, the CEO of EDC. And today I have the pleasure of introducing Pierre Cleroux, the VP of Research and Chief Economist for BDC. So welcome, Pierre. Thank you for joining us.
Well, thank you for the invitation. I'm glad to be here.
So yeah, today Pierre will be giving us an economic update as well as some trends in the industry across Canada. I think a little bit Ontario focused as well. And before Pierre does his presentation, I'll just tell you a little bit about him in case you don't already know. Pierre was appointed the Vice President of Research and Chief Economist in 2012. So coming up on 10 years with BDC, congrats. That's awesome. Over his 25-year career as an economist, he's held several influential positions that have had a direct impact on entrepreneurs in Canada and abroad. Before joining BDC, Pierre worked for the government of Saudi Arabia as Vice President, Business Analysis in the Industry Clusters Development Program. His role was to create strategies, define sector policies, and conduct financial and economic analysis of industrial projects. Previously, Mr. Cleroux was the Quebec Assistant Deputy Minister for Economic Development, Innovation and Export Trade, responsible for the implementation of economic policies and programs to support small and medium-sized businesses and encourage entrepreneurship. He was also the strategic advisor for Montreal International and was responsible for attracting foreign investment from India and the Middle East and developing international relationships and partnerships. He has worked for 12 years at the Canadian Federation of Independent Business in various roles, including economist and Quebec Vice President. So welcome, Pierre. Thank you for joining us. As you can see, he's got a wide breadth of experience. So I'm really excited to see what you have to present to us today.
Thank you, Kevin. Good afternoon, everybody. I'm just going to share my screen. I have a PowerPoint presentation. So my goal today is to give you an idea of how the economy is going to perform over the next 2 years. So first, I'm going to talk about the economic outlook for Canada, also for Ontario. And secondly, I'm going to talk about how our business environment is changing. So first, the Canadian economy. The graph that you see is our growth, GDP growth per quarter. As you can see, obviously in 2020, we had a huge decline. And after that, a rebound when the economy reopened. In 2021, we had the solid growth at the beginning, but the second quarter was actually negative. This corresponds to the third wave of the virus. Some part of the country had more difficulties with the third wave, and that's explaining why the economy had negative growth. But the third quarter, which is basically the summer, has been very strong in Canada, and we expect the fourth quarter to be also strong. In terms of jobs, this is the level of job in Canada. We are back to the pre-crisis level. We have actually 200,000 more jobs than before February 2020. But what is quite interesting on this graph is to see that the impact of the virus is really diminishing on the economy. During the first wave, we lost 3 million jobs. During the second wave, we lost only 250,000 jobs. During the third wave, we lost about 150,000 jobs. And now we are at the end of the fourth wave, and actually the number of jobs in Canada is increasing. So this is a very, very good news. The pandemic is not over. As you know, we have a new variant, but the impact on the economy is much less. And one of the big reasons for that is the fact that our level of vaccination is really high. 76% of all Canadians has been fully vaccinated so far. As you can see from this graph, this is the highest level among the G7 countries. much higher than the United States at 58%. So this is really helping the economy because it's protecting people and it's really reducing the impact of COVID-19 on the economy. So our forecasts for this year and next year are quite positive. We believe that our growth this year is going to be over 4%. Unfortunately, it's not going to be enough to go back to the pre-crisis level in terms of economic activities because the decline last year was 5.4%. We should be able to reach the same level of the GDP at the beginning of 2022. And we are expecting a very solid growth for 2022, 3.5% growth for the Canadian economy. So what is going to drive growth? Well, there's a number of factors, but the number one factor is consumers. Consumers, well, they represent 75% of our economy, but also we are quite optimistic they are going to keep spending because first, Canadians' wealth has been increasing. We are richer like today than before the crisis for three reasons. Government program has been helping Canadians. Our disposable income is higher today than before the crisis. The housing market has been performing very well. If you own a house, you're probably richer today than before the crisis. And also Canadian investment, the value of our Canadian investment is much higher today than before the crisis, thanks to the stock market that's been performing quite well. So this is important, this wealth, because it makes Canadians spend more. On top of it, the Canadians save a lot of money last year. Typically, Canadians save about between 18 and 20 billion every year. In 2019, it was $18 billion. Last year, Canadians saved more than $200 billion. That's really exceptional. It's not surprising because during every recession, consumers tend to save money. The saving rate is much higher during recession because people are worried about the economy, so they will postpone buying big items. For example, I won't change my car this year because I'm not certain to keep my job, so they postpone items like this. But this number is very significant, and one of the reasons as well, there was a lot of restrictions on the economy, so when restaurants are closed, you cannot travel, it's easier to save money. But this is important because it means that Canadians have a lot of money in their pocket and they have a lot of money in their bank account. And some of it is going to be spent. We already see that consumptions of goods in Canada is higher by almost 5%. So this is remarkable if we think about it. We are still in, we're just getting out of a recession and consumption is really high. So that's the reason why we believe that consumption will continue to stimulate the economy in 2022. On the business side, business investment are increasing, but they're not back to the pre-crisis level. They're still lower, which is different in the US where business investment are actually higher now than before the crisis. But our latest research is showing that business investment intentions are moving up, and they are actually higher now than they were before the crisis. So we are optimistic that business investment are going to be higher in 2022, and they will also contribute to growth. Finally, our export are performing well after a strong decline at the beginning of 2020, while they are now more elevated than before the crisis. The US economy is performing very well, so the demand for Canadian products and Canadian services is quite elevated, and we expect to see this demand as strong for 2022. So, but there's some challenges, and one of the challenges is inflation. As you know, inflation is quite high, 4.7%, much higher than what we used to see in Canada before the pandemic at around 2%. Of course, in 2020, when the part of the economy was locked down, inflation went down, prices went down before they really went up. So should we be worried about inflation? Well, we still believe that inflation is temporary and it should go back to normal or at least reduce significantly in 2020. There's a number of factors to support this argument. First, inflation is calculated over 12 months. So the inflation that we see now in October 2021, compare prices now with October 2020. So as you can see from the graph, in October 2020, prices were not elevated. So there's a base effect. One of the reasons why the number for October 2021 is high is because we compare prices with the low base. Also, and probably more important, there's a lot of imbalance in the economy. The pandemic has made consumers shift their demand. A good example of that is lumber. The housing market has been performing very well, so there's a lot of construction, strong demand for lumber. A lot of Canadians decided to renovate last year. People couldn't travel, so they decided to build or rebuild the deck. So there was a strong demand for lumber, and the supply couldn't adjust very rapidly. So the impact was an increase in price. Actually, the price of lumber in Canada almost tripled. But as you can see from the graph, as supply adjusted to the demand, you can see that price went down and almost back to the pre-crisis level. Now we have an increase because of the flood in BC, which is limiting the supply of lumber, which that's the reason why we have an impact on price. But this is a good example of what happened over the last 12 months in the economy. As the economy recovered and the demand for a lot of products were strong, we also have supply chain issues. Well, prices went up. And that's the reason why we have inflation. We believe that these factors are going to rebalance and the inflation should go down. Our biggest worry is the fact that salaries are increasing, and salaries have the potential to maintain inflation a bit higher. So we'll see in 2022. We're still confident. We still believe it's a temporary situation, but we are really looking at this because it's an important factor for interest rate. So as you know, interest rates are low. The Bank of Canada reduced interest rate to stimulate the economy at the beginning of the pandemic. They're still very low. The question is, I don't think the question is, are they going to increase? I think everybody agree on that. The question is more when. We believe that in the middle of 2022, the Bank of Canada is going to start increasing interest rate. At that time, the Canadian economy would be back to the pre-crisis level. It's almost there, except for some sectors like accommodation and food services. But for the rest of the economy, we are performing quite well. So in the middle of 2022, we should reach full capacity in Canada, and the Bank of Canada should increase slowly interest rate. They will do it slowly, gradually, not to have a negative impact on the economy. And their goal would be to go back to what we call a neutral rate, an interest rate that doesn't stimulate the economy and doesn't have a negative impact either. So this rate in Canada is around 2%. So you should expect that interest rate will start increase in 2022 and gradually reach 2%, probably over 2 or 3 years, depending on the performance of the Canadian economy. So the Ontario economy now, well, this is the situation of the job situation. And as you can see, Ontario is performing a little bit better than Canada. We have more jobs in Ontario right now than before the crisis, about 110,000 more jobs. But you can see that the recovery is quite different from one sector to another. Here you have the percentage of the level of job right now compared to February 2020. You can see that, for example, if we take the first one, professional services, we are 115%. So there's 15% more jobs in this sector than before the pandemic. It represents about 100,000 jobs. Information, which is culture and recreation, which is a lot of jobs in tech, again, 115%. So as you can see, a lot of sectors are actually having more jobs today than before the crisis. If you go at the bottom of the graph, you see an exception, which is accommodation and food services. This sector is still missing about 50,000 jobs, so that's very significant. Basically because tourism is not back as much as before. International tourism is still very minimal compared to the numbers we used to have. Even business traveling is quite low compared to the pre-crisis level. So this sector is going to take more time to recover, but the rest of the economy in Ontario is pretty much back to the pre-crisis level. And the housing market has been performing very well everywhere in Canada, especially in Ontario. Here, we compare prices before the crisis and now. In Ottawa, for example, the price has increased by 63%, which is really exceptional. Usually when you have a slowdown or recession, you will see the housing market to slow down, which is not the case right now. Interest rate went down. Yes, a lot of Canadians lost their job, but a lot of Canadians recuperated their job very quickly. There was a lot of people who kept their job. And so there was a strong demand for housing. This demand is slowing down now. And we believe that 2022 is going to be a good year for the real estate. We don't expect prices to keep increasing as much just because people won't be able to afford it. But the housing market will continue to do well, which is a positive for the economy, because when you have a strong demand for housing, you have more housing starts, which is creating jobs in the construction sector. Look at these numbers. They are actually much higher than the average of 2018 and 2019. We are at the record high, which is really unusual, but there's still a strong demand for housing. In terms of the manufacturing sector, which is a very important sector for the Ontario economy, well, as you can see, the decline was very significant. The recovery was quick, was fast, and we went back very quickly to the pre-crisis level. In general, the manufacturing sector in Ontario is performing very well. There's actually 12,000 more people working in manufacturing sector than before the crisis. There's an exception, and the exception is that transportation equipment, mostly automotive, not because, as you can see, this is a blue line. The automotive sector came back very quickly, but it went down after that. And the demand for automotive has been strong everywhere in North America, but we have a supply chain issue. Mostly, we have a shortage of semiconductor, and this small chips is really slowing down the production in Ontario and also in North America, and is also slowing down our export. Look at these numbers. Export dropped significantly at the beginning of the crisis when the economy was under a lockdown, came back to the same level very quickly, but slowly declined because of the supply chain issue. So this is important. This is an important sector for the country and also for Ontario. We believe that this situation is going to reverse in 2022. It's taking much more time than we thought, but they are building new plants for chips, and the supply is going to increase in 2022. The situation should go back to normal probably in the summer 2022. So in summary, both economies, Ontario and Canada, will continue to grow at a very solid pace in 2022 and 2023, mostly supported by consumers. But we're not out of the wood yet. We have some challenges. First, COVID-19 is not over. As you know, we have a new variant coming. Now experts are saying that our vaccine are going to be efficient, but there's a lot of uncertainty around that. We also have a shortage of labor that I'm going to talk in the next section, and we still have supply chain issues. Our research is showing that the supply chain issues is going to really improve in 2022 as we move away from the pandemic, but it's still an issue. Overall, both economies are going to perform well, but there's still some challenges. So the last part of the presentation is about 4 trends that we see that are changing our business environment. And the first one is probably the most important one, is the shortage of labor. 55% of Canadian businesses have difficulties to hire people. Now, that's the case everywhere from coast to coast, and that's the case, of course, in Ontario. So why is that? Well, the most important factor is the fact that we have an aging population. 20 years ago, only 13% of the population were over 65. Now it's almost 20%. And it's actually going to be, we're going to reach 25% in about 10 years. Why is this important? Is when people reach or are close to 65, a lot of people are leaving the job market to retire. And that's exactly the problem we have now. A lot of baby boomers are leaving the job market to retire. Not enough young people there are entering the job market to replace that. So to show you the impact on our economy, well, this is the labor pool. This is the number of Canadians between 15 and 64 years old, basically the age of working. Some people work over 65, but most people work between 15 and 64. And to show you, 2 decades ago, between 2000 and 2010, this pool of workers in Canada increased by 12.5%. The following decade, people started to retire, and the growth of our labor pool was actually increased by only 6.6%, half the growth that we have experienced before. The next decade, this growth is going to be below 4%. In actually some provinces, like in the Atlantic provinces in Quebec, this growth is going to be negative in this decade, as more and more people, more and more Canadians are retiring. After that, when the baby boomers will be out of the job market, well, growth is coming back a little bit. So this is really the reason why we have a shortage of labor. As the labor demand continues to increase, our labor supply is not increasing as rapidly. So there's a gap that we are creating between the demand and the supply. This situation was already the case before the pandemic. I don't know if you remember, the unemployment rate in Canada was 5.6%, the lowest rate in 40 years. So it was already difficult to recruit people. We got a pause during the pandemic, but as the economy is recovering, we have the same situation. There's a good news here. The unemployment rate is down. Many Canadians who had difficulties to find a job, now it's much easier for them to find a job. The challenge is for businesses. The challenge is going to be with us actually for the next decade. So it's going to be difficult to recruit for the next decade because the most important reason is the fact that we have an aging population. And the pandemic makes things worse. How? Well, because it reduced the level of immigration we have in Canada. It actually reduced by half. In 2020 and 2021, because of the restriction of COVID-19, we couldn't accept as many immigrants. We're missing about 400,000 people that didn't come to Canada because of COVID-19. Immigration is going to resume in 2022, but we're kind of missing a big chunk of people who were going to go on the job, on the labor pool, on the job market. So what can business do? Well, we release a report, and you can have access to our full report at bdc.ca. It's free. But I would summarize some of the strategy. Unfortunately, there's no magic bullet. There's no magic solution. But there's a number of strategies that business can use. In our report, we did some research, and we look at more than 1,000 companies in Canada to look at what they do, and also what is the best strategy. And the number one strategy that you see here is by far the most efficient one. Businesses who have invested in automation and technology, they have actually perform much better than others in terms of revenue growth and profit growth. So technology is a good solution. It doesn't replace people, but it does replace some tasks. So it reduces your need for workers. We often think that automation is more for manufacturing sector, but technology has really changed, improved. So you can use automation now or technology in every sector of the economy, in retail, even in services. You see that more and more in grocery store, drugstores, or retail, where you have an automatic cash register instead of having a person. So this is really the future for Canada, as we are going to have more and more difficulties to recruit people. There's a number of other solutions. I will just attract your attention to the fourth one. Despite the fact that our unemployment rate is low, there's some group of our society who still have a much higher unemployment rate. That's the case of young people just out of school. That's also the case of immigrants. Immigrant in Canada has almost twice as much unemployment than non-immigrant. And also that's the case of people who have an handicap. So this is a very important, we have to look differently at the labor force than we used to. You know, everybody wants to hire people who have 10 years of experience, but these people are not really available right now. Too many businesses are looking for them. So it's very important for businesses to look differently and expand our hiring pool. The second trend that we see is e-commerce. The graph that you see now is actually the volume of e-commerce in Canada. You can see if you look at the bottom, the beginning of the graph, we just the first few months of the pandemic, the volume has tripled in Canada. Now it's about twice as much as before. So this is not a new trend, but the pandemic has really accelerated this trend, and we're not going to go back. So the number of transactions online will continue to increase. So it's important for businesses to keep investing, to increase their presence online, because that's where Canadian consumers are shopping. The third trend that we see developing is the remote work. At the beginning of the pandemic, 40% of Canadians work from home. Now we're down to 25%, but 25% is still a very large proportion, a very large percentage. I'm not sure where we're going to end when the pandemic is going to be over, but something we are sure from our research is this percentage is going to be much higher than before the pandemic. And that for two reasons. First, on the business side, businesses are much more open to remote work than they were. 74% of Canadian businesses say that they will rely on some remote work arrangement after this crisis. They really changed their perceptions over the last few months. First, they realized that people are as efficient from home in most cases than they are from the work from the office. They have invested a lot in technology to allow their workers to work from home. So they really changed the perception. Not only businesses change their perception, but Canadians, of course, they like to work from home at least a few days a week. 54% of Canadians will say that they will really pay attention to the possibility of teleworking before they accept a new job. So now Canadians they want to work from home more and more. So we believe that this trend is going to stay with us after the crisis. Finally, the last trend is the environment. It's not a new trend, but we believe it's going to accelerate in the next decade. I actually believe that the next decade is going to be the decade of the environment. As you know, the Canadian government committed ourselves, Canada, to reduce our carbon emission by the year 2030 and also by the year 2050. We're not the only one. Almost 200 countries around the world have made the same commitment. So there's going to be a lot of pressure on business to improve or to reduce their carbon footprint. A lot of pressure from the tax issue. Carbon tax is going to increase, so the cost of polluting is going to continue to increase. They're going to get pressure also from consumers and from investors. So it's really going to be important for businesses to reduce their footprint. First, I think everybody agreed that we should all do our bit to reduce our own footprint, and that's, of course, include businesses. And also, they're going to have a lot more pressure on businesses. So this is going to be the time to look at how our business can reduce our footprint. I know at BDC, we have a very specific program to reduce our footprint in the next decade. So in conclusion, the economic growth is going to be solid in 2022 and 2023 for both Canada and Ontario, but our business environment has really changed. The need to invest in technology is more than ever before. The online business is growing rapidly. More and more Canadians want to work remotely, so you need technology for that. And the best strategy to meet labor shortages is actually to invest in automation. So we're going to see many businesses to invest in technology in the next 5 years. And of course, very important is the importance to protect our planet. And like I said, I believe that the next decade is going to be the decade of the environment. So in terms of every businesses should look at how they can reduce their footprint. So I'm going to stop here. Very happy to take your question. If you have any question, I would be happy to take them.
Thank you, Pierre. Let's see, we got a few questions here that have come in, and the other attendees, if you guys have any questions, feel free to shoot them into the Q&A section. So one of the questions here has to do with the baby boomers retiring and the need for more employees, the labor shortage. When considering the labor shortage, do they take into account that these baby boomers positions might not be positions when they leave their jobs, that technology will then take them over?
Well, actually, probably some of these jobs are not going to be replaced. But right now, there's a million vacant jobs in Canada. This is by far a record. There was a high number before the pandemic, but a million is a very big number. So despite the fact that some of the jobs are not going to be replaced, businesses have a lot of vacant job in the manufacturing sector. They can hire people if they find them. So this issue is not going away.
Gotcha. Here's another question about the Canadian household debt. So it's hit a record level over the past few years. So what, if any, effect will those debt levels have on Bank of Canada's interest rate outlook and the economy overall?
I don't think the Bank of Canada is going to change the strategy because of the debt level. It's true that the Canadian consumer debt level is high, but most of the debt is related to a mortgage. So that's a much better situation than if you had a debt that is just because you spend money. So that's reducing the uncertainty around the consumer debt. And you have to remember the mandate of the Bank of Canada is price stability. So they are going to increase interest rates when they believe that the Canadian economy have reached full capacity. And that's basically their main mandate. I'm not sure they're going to be too worried about the level of debt for a consumer debt.
Gotcha. So let me see here. Another question is, not sure if you'll be able to answer this one, but what jobs does BDC see in the future that are not here now? I guess what emerging trends?
Definitely, the sector that is growing the most is technology. And that has been the case over the last 5 years. The Canadian economy grew by less than 2%. The tech sector has been growing every year for the last 5 years by more than 5%. So it's growing more rapidly than any other sector of the economy. So any jobs related to tech is going to be in high demand, including jobs that don't even have right now. For example, related to artificial intelligence so there's a lot of technology that are developing now. So if I had to guess in the job that we don't know now or we don't have now, they are going to be related to technology and the new technology like AI.
All right, like the metaverse. Who knows what's going to happen there? So here's another question back to the labor market and the labor shortage. Are these million jobs mainly low skilled, mid skilled, or high skilled? Is there a breakdown between them?
Well, they are everywhere, basically. Like I just talked about technology, which is high skills. That's the sector that has the highest vacant job. So technology, it was the case also before the pandemic, but as now there's even more investment in technology than before. So there's the biggest problem that these companies have is to recruit people, and they are even recruiting outside Canada. Like they will, in tech, it's very easy to work remotely. So a lot of companies are hiring people in developing economies, and they have people stay there and work from there. However, this new phenomena since the pandemic is it's very difficult to find workers with low skills, like in the restaurant and accommodation industry, because of the fact that we are aging and a lot of people, there's not as many people, but also because during the pandemic, a lot of people moved to another sector. And that's especially the case in accommodation and food services. They were the first to lose their job at the beginning of the pandemic. When the economy reopened, there was a lot of opportunities. So 20% of people in food and accommodation moved to another sector. Now, so there's a strong shortage of labor in this sector, even if it's low. It's often low skills, but it's as important as the other jobs.
And what would be your suggestion for these sectors that are losing people, such as restaurants or retail, that can't necessarily automate? Is it invest in technology? What would be your suggestion, I guess, for those industries?
Well, we're seeing a lot of investment in technology in those sectors. It's not possible to replace everyone, but for example, Couche-Tard has a pilot project in McGill with a convenience store without a single employee. So this is a pilot project now, but we're going to see that more and more. Drugstores, if you go to a lot of drugstores in Ottawa, you will see that a lot of automation in terms of paying at the end when you pay there's a lot of automatic cash register. And technology is really improving, and so you can really use technology now for much more than before. So you're going to see that. The other, when you cannot do that, you have to make sure that your total compensation is competitive. We see a lot of business now to make an effort to not only in terms of salary but benefits or flexible hour. A lot of people are looking for more flexible hours work. So I think that's another strategy to use. I've seen clients who are sharing profit with their people in the construction industry just to retain them because there's a shortage there as well. So you have to be very creative.
Right. I used to hear it's you want to put your client first, but what I'm hearing now more and more often is you put your employees first, and then they'll put their clients first.
Yeah, that's a very good way to see it. Yeah.
So I actually have a question of my own here. All these savings Canadians have, could that lead to more inflation in and of itself, of just having this more money, the higher salaries, the more savings? And if so, which are there specific industries where this would have a higher impact than others?
Well, I think there's two reasons why we have inflation. One is just what you mentioned. People have more money, they spend more. So the demand for some products is just going up, and it's causing an increase in price. We also had a lot of supply chain disruptions, which caused an increase in price as well. So, but there's no doubt that the strong demand that we have because people have more money, and it's not only in Canada, in the US as well. So that's is causing inflation. As these programs, most of these government programs on both sides of the border are done now. So as we move away from the pandemic, the pressure on price should go down. And that's the reason why we believe it's temporary. We're a bit more concerned now than a few months ago, but we still believe it's going to decline in 2022.
We hope so. Okay, here is another question. In the realm of clean technology, what are some industries that you see as the most impactful to Canada's economy and the environment moving forward?
Well, there's no doubt that clean tech is going to be an important sector to move to more. We're going to see a big shift in the energy sector in the next decade. It's already happening. For example, China has decided to reduce its consumption of coal and is replacing it by natural gas, mostly a bit of oil. So the price of natural gas has just exploded because China is a big country. So when they make a move like this, it's really having an impact. We're going to see in the next decade a lot of move to non-fossil energy. So clean tech will play a big role in terms of innovation, in terms of finding non-fossil energy. The issue we have right now is 90% of the energy in the world are based on fossil. So we want to move away from there, but in order to move away from there, you need to have the non-fossil energy available. So there's a lot of potential in innovation to find energy that are going to be that are going to replace oil and natural gas in the future. So this transformation in terms of the environment would create a lot of a lot of opportunities for business to develop new ways of doing things.
Right. So here is a question about the supply chain. If these supply chain issues continue to persist, is it worth it for some companies and maybe Canada in general to invest more into manufacturing here versus importing from across the world?
Well, that's a very good question. We thought at the beginning of the pandemic, when we saw these supply chain issues, we thought that we will bring back some production that we lost over time, what we call reshoring. We actually did a study to find out that nothing have changed. So many companies have looked for other suppliers, but they're looking for suppliers in other low-cost countries. For example, we have a lot of clients who had very difficult time with Asia, so they're looking for new suppliers in Mexico. But the gap of the or the the reason why they do that is the cost is still much lower in those countries than it is in Canada. So when we look at the reshoring in Canada, we haven't seen this happening. So I don't think it's a long answer to say that I don't think it's going to change, just because producing in Canada is too expensive for some goods like textile, clothing. It's much cheaper to produce in low-cost country, and I don't think the pandemic will change that.
Gotcha. And with these emerging remote working trends, they don't look like they're going away. Could companies pivot to hiring from outside the country for remote jobs around the world? One of the questions was relayed in regards to is this a way that we can help alleviate this labor shortage?
Yes, it is, and some companies are already doing that. These two things that we are saying: hiring people in other countries to do, some tasks. Also, we see a lot of companies who are they are going to Eastern Europe or other part or Asia to recruit people, and they bring them back here. For example, truck drivers it's very difficult to find a truck driver these days. So a lot of companies are recruiting outside the country and they bring them here. So, like I said, you have to be creative, and companies are creative. They need manpower to be able to continue to operate or to grow.
Right. Matter of need, so they'll just start doing it regardless. So in regards to talking about clean tech and how we're innovating and the energy sector is going to change rapidly, how do you foresee this affecting provinces like Alberta or BC that have major focuses on oil and natural gas in the short term and long term? Will they have to adapt to the changing times and reinvest their resources in order to kind of keep those sectors going?
In the short run, what we are saying is this will have actually a positive impact on the price. Oil price, the price of natural gas are going to continue to be very strong, higher than expected, because this transition is not going to happen overnight. And we are under investing in oil, for example. So as the world economy is reopening, the demand for oil is strong. It's actually higher than the supply. For the next 10 years, we believe that the oil price is going to be very volatile and is going to be mostly elevated. After that, as more clean energy is available, well, the demand and the price for oil is going to diminish. So in the short term, Ontario, like Alberta, is going to benefit from that. In the long term, will be important to diversify the economy, because in a 20 or 30 or 40 years horizon, the oil sector is going to be much smaller.
Right. Okay, well, I think unless we have any more questions here, I know we're getting close to the end of your time. I think that might be it. So, Pierre, thank you so much for joining us today. We really appreciate it. That was an awesome presentation. And it looks like there are some things to look forward to, even with new variants coming on. You know, the economy is not completely in the tank. So yeah, we really appreciate it, Pierre, and the whole YCF community thanks you for joining us.
Well, thank you for the invitation. Thank you for the great questions as well.